A significant setback in the housing recovery in September. Pending home sales, those are deals that are signed but not yet closed, fell a much more than expected 5.6% last month. That made them head down for the fourth month in a row. Realtors say a combination of rising mortgage interest rates and skyrocketing home prices have kept some would-be buyers on the sidelines. And that news sent shares of some of the nation's home builders down today. Builders like D.R. Horton, Pulte Homes, and Lennar all lower by a fraction. Shares of the builder Hovnanian fell nearly 2%.
And joining us now to talk more about housing trends and stocks to own, Will Randow. He is U.S. Homebuilding Analyst at Citi. Will, welcome to the program. What's your take on this report? Is this the beginning of a downward trend?
Well, thanks for having me first. Second, I'd like to say the pending home sales index has been down for about 3 to 4 months, month over month. In the prior months, we still saw existing home sales from a SAR basis up because transaction days were actually declining. Basically, transactions were happening more quickly. I think what's happening here, what we're seeing is, one, it's somewhat seasonal. We're seeing a decline, but we cannot deny that the pace of the recovery in housing is in question. From a pending perspective, we saw some slowness regionally, but what I would say is I think as we get into next year, we'll have a better firmness in how much we're going to grow or what pace that recovery might come to. But we'll get a few speed bumps along the way, and I think that's what's happening.
Does this slowdown in pending sales presage a slowdown in actual sales in the months looking forward?
As we went back the past few months, the slowdown that occurred in the pending home sales index actually was not reflected.
Oh, really?
We saw increases in existing home sales because the transaction days were actually declining because it was easier to get a purchase mortgage through the channel as opposed to heavy refi volume, which was declining. I think as we go forward, I would expect to see existing home sales level off, maybe and slow a bit as we get towards year end like it typically seasonally does. But the one thing we do have to take into account is in October, you did have some tightness on the mortgage side. The FHA was down to 4% of its staff. Fannie and Freddie also, you had income verification slowness in regards to the IRS because they were shut down. So there was a shock to the consumer. We can't deny that. There was a slowdown that started in July from at least a new residential demand. So we are slowing a bit, but there is some hiccups that have caused it to be a little bit worse than one might perceive at first blush.
You know, Will, when you look at the earnings reports from this sector, from home builders during this latest earnings season, not bad. They were pretty good. And you have a couple of stocks that you are recommending, D.R. Horton, William Lyon Homes, and Brookfield Residential Property. And those stock charts are going to come up in a second. Tell us why you like those three.
So with William Lyon, you are exposed to the West, primarily California, Las Vegas, and Phoenix. Now, those markets are getting possibly frothy. However, the basis of William Lyon's land is probably about 20% of that below the peer set. So intrinsically, there's more value in the book. On Brookfield Residential Properties, it's very similar. There's only 3 analysts that cover that company as we know it. About a year back, the company gave us the undiscounted book value of essentially their assets, which was a little over $40 per share for a stock trading in the mid to low 20s. So from that perspective, you might have a double over the next 3 years with Brookfield Residential Properties. On D.R. Horton, I believe the first-time home buyer is going to eventually come back as the purchase side of mortgage originations loosen. We are seeing some evidence of that in the past few months. So that's one of the key drivers there.
As you look at the data that came out today and as you analyze the numbers, home prices have been rising year over year at about 12% for most of this year. Do you think that is sustainable? What do you think they're going to rise over, say, the next 12 months?
I would tend to think, though, it'll be more of a moderated pace. Now, we have existing home sales inventory, meaning supply, of about 5 months today. So that is going to imply that we'll continue to see price increases, but I think that'll get more gradual, call it down to a low single-digit pace as we go forward.
All right, lots of good information, Will. Thank you so much.
Thank you.
Will Randow, U.S. Homebuilding Analyst at Citi.